Hi everyone, Joe Gentili from Left Tail Risk Advisors. In this video, I want to go through a simple proposition, which is that not all life insurance companies are equal. And I think there's never been a more important time in the industry to be selective about which insurance companies you decide to buy your life insurance with and which agents you decide to work with to guide you through that process. And the reason for this is there's a lot of distinctions between the types of life insurance that exist and different features for different policies. And I've gone through some of these in videos before. But the absolute most basic thing to evaluate when considering which company to work with is, will they be able to pay a claim when the time comes? Life insurance contracts, by their nature, especially permanent life insurance contracts, are multi-decade long contracts. That is a long time that you are relying on a company to be in business and to be able to pay claims. So on the outset, deciding which company to work with is very critical. And I think for a lot of the history of the life insurance industry, carriers have been more alike than different in a lot of ways. There's mutual companies, and they're a little different from the publicly traded stock companies, but there haven't been many failures in the life insurance industry. There have been some noteworthy ones. There's some happening right now, but by and large, the track record for life insurance companies has been nothing short of fantastic, way better than banks. So, as a category in an industry, very reliable. In the recent past, there's been a trend of private equity companies getting involved in the life insurance industry and buying carriers. And part of what that trend has accelerated is there's this process where the insurance company basically reinsures themselves through offshore entities, mostly in Bermuda and the Cayman Islands. And there's reasons beyond the scope of this video that they do this, and there's different ways that they do it, but it's something that is concerning for a lot of people in the industry because there's when the assets backing up your claims move offshore, there's less transparency as to the quality of those assets. So there are some people that are concerned that some companies are um, moving a lot of their assets offshore, and there's not a lot of clarity as to how good those assets are. So it's very important that you understand before you buy a life insurance policy, generally what the risk profile of the company that you're working with looks like. And it's important that you're working with an agent that is aware of this issue, because not all agents, I'd say most agents are not. And I would just give a rule of thumb with this. So, as a rule of thumb, where I think we're seeing the most risk is where this offshore strategy is critical to the business model of the insurance company. And there's a couple of like tells for that. So the first tell is that this is a private equity owned insurance company. I don't think that in and of itself disqualifies an insurance company from wanting to do business with them, but I don't view that as a positive factor. Another tell is that the company is primarily involved in the annuity business, not the life insurance business. In the annuity business, the offshore use of offshore reinsurance companies is used to generate extra spread, extra profitability for the life insurance company. It allows them to offer what appears to be more attractive rates. Very important in the annuity business. So companies that are private equity owned and primarily in the annuity business, I think as a rule of thumb, tend to use this offshore reinsurance more heavily than companies that are not. fit in that category. So I would be very cautious about working with companies in that category. The companies I would feel more comfortable with, as a rule of thumb, are I prefer mutual companies over non-mutual companies. And then beyond that, I prefer mutual companies that even if they're using offshore reinsurance, which is common, they're using it in a very narrow circumstance. So for companies whose primary business is life insurance and not annuities, they tend not to use this as much. So I would look for that. I'd want to deal with a company that is primarily in the life insurance business. The other aspect of it that you want to look at is if they are using this offshore reinsurance, they're using it to cover the risk of a business that's not their primary business. So a lot of, for instance, mutual companies at one point or another, they were involved in legacy long-term care insurance or guaranteed universal life or variable annuities. And those businesses in previous decades have introduced a lot of risk. They didn't perform as well as the carriers had hoped. And some carriers are using um, offshore reinsurance as a way to lower the risk on those particular blocks of business. That to me is a less risky proposition for the policyholders that they're doing that. It's not the primary driver in their business, and you're not seeing them move the majority of their assets into offshore reinsurance. So to summarize this, I would say that it's always been important to work, to look to work with life insurance companies that have very strong balance sheets and are highly rated because the most fundamental thing you want out of a life insurance company is the ability to pay claims. That is more important today to evaluate than it's ever been because there are some trends in the industry with some life insurance carriers where they appear to be introducing more risk into the life insurance carrier's balance sheet. And since these are very long-term contracts, you want to be very cautious and very conservative about who you work with because you want to make sure that if it's 3, 4 decades from now, you want to make sure that they're able to pay a claim. And it's important to work with agents and brokers that are aware of this and mindful of it, and at least are trying to steer you towards companies that don't just look good in illustrations, that look like they're a good deal, but they're also mindful that they're steering you to companies that are very conservative and financially strong. Because as I said, there's nothing more important for a life insurance company than its ability to pay claims down the line. Any questions on this? I encourage you to reach out. And as always, if you found this video useful, I encourage you to like and subscribe for future videos. Thanks.